Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey everybody, welcome to Mortgage on My Mind. I'm Natalie Salins, and today we have the fantastic Kevin Ker. He is a loan officer and been in the business since 2011. He supports his clients with a true education of the business and specializes with first-time homebuyers and being creative with programs. Thank you so much for being here, Kevin. Welcome to the podcast.
Thank you for having me on, Natalie. I really appreciate it and looking forward to it. It's going to be fun.
Yes, absolutely. Absolutely. So we were chatting a little before, something super important about getting into the process of purchasing and what that means for clients, and that you specialize in the education of having clients feel comfortable with what they're, the process of it and getting into purchasing, what it means to obtain a mortgage. And it's such an important part of our business and how we interact with our clients. And so I just wanted to kind of start there with you and what is your process normally? And what does that mean to you? Because you seem so authentic and lovely and meaningful when it comes to how you interact with clients. So what does that look like for you?
Yeah. So, for me, it's funny actually, because before I got into the mortgage business, I was actually going to be a teacher, was going to go, get my teaching credential, maybe go coach high school volleyball and teach history. But my dad was in the mortgage business for 20 years. And so when I graduated, he was like, why don't you come work for me? And so I did push some paper, kind of helps, set up and structure files. But one of the things that I noticed that he did with his clients, which is what I fell in love with, was the pure educational side of the home buying process. Because, when you're talking about someone that's looking to probably make their biggest financial purchase that they're ever about to make, it's really important that they have a good understanding of what that's like. And so I really much hang my hat on that. And so where my process starts is it's very much asking very basic financial questions. I usually talk about that's what the difference is between a pre-qualification and a pre-approval, right? The pre-qual is us just getting to know each other,
Right.
understanding what their financial situation looks like, right? Hey,
Like our intro conversation.
right. What do you do for work? What do you have? What do your debts look like? What kind of assets do you have in the bank? Is there an ideal monthly payment or purchase price you're trying to stride, right? We all know that every, borrower comes in different shapes and sizes, right? And so it's really important that the core questions that we're asking them in that basic pre-qualification is no different than any other person that we're talking about. So it's about getting to know them and
Exactly.
understanding what their long-term goals is instead of, we get the people sometimes, as you know, where they're just like, what's your rate and what's the best price? And it's like, there's so much more to it in terms of really understanding what it goes into it. So that's what I really love doing and putting them in a position where they feel really comfortable about moving through with that process.
Exactly. It's so funny. There are so many times I get a phone call that's like, yeah, I've talked to 3 other people today and what can you get me?
Yep.
And you're like, hi, nice to meet you. Is all you want a rate quote? And it's unfortunate, but most of the time they're like, yeah.
Yeah.
And you're like, all right, cool. Well, this is what we got. And then I'll try to, what's the credit? Because it can't just give you a rate quote. People don't
Right.
understand that. Depending on how we're structuring it, which investor we're selling it to, I'm going to have 10 different rates to offer them, right? But so you get it, you give them a rate quote, and then you're like, just remember, it's not always about the lowest rate. Yes, you want the lowest payment. The difference between these eighths is $12. It's not really a big deal. And it's really more important that you feel comfortable with who you're with and that you know the person that is doing the loan for you is going to close it.
Right.
because you're about to get into a legal contract and you want that contract to go through. And like, not everyone is going to do that for you. And not everyone is going to do that for you who can help you, like you do, understand the process and take you through it in a guided way, where you feel supported and the communication is always there. Like, I don't know about you, but I'm constantly getting texts and like crazy. I feel very responsible to answer very quickly. And.
Well, yeah, and that was the other part of it, right? It's like we're talking about just the very beginning of the stage of this process, right? But then they finally submit documents, maybe they finally get an offer accepted on a house, right? And it's like we don't stop there. It's constant communication and updates throughout the milestone parts of those processes, right?
Right.
We're all a team, right? And you know this. It's you sit there and you work with not only the buyer's agent, but the listing agent and the escrow company. And there's so much that we do behind the scenes with all of these people that are very involved in it. And in the best way possible, the goal is to have that borrower that we talk to just go, I know it's being taken care of because I don't have to bug them or ask them what's going on during that process. And it's
Right.
unfortunate how often I do hear from other agents that we deal with that they're like, I haven't heard from the lender in a week. I haven't heard, the status of this, or I haven't, whatever that big important milestone is, right? And so it's from a start to finish standpoint, it's making everyone feel really comfortable. And I keep using that word, but that's the reality of what it is, that it's a very comforting process that we
Totally.
go through for those clients.
Right. Exactly. I mean, I know that a lot of lenders, when they don't have an update or something's gone wrong on the file, and it can happen, like we're all human, things happen, things don't get caught up front. You send me a bank statement that's new, and now we find out all this other stuff from it.
Yep.
It can happen and does. I think it's how you handle it. Like you said, I can't tell you how many times I get calls from agents that are like, the lender has gone missing. The lender is completely MIA. I called him 2 days ago and I can't get in touch with him. And that type of communication, I mean, that is like a surefire way to never hear from that client or that agent again.
Right.
Because even if it's bad news, it is still updates and news that you have to give them. And just for me, it's like, just be honest about it. Like, hey, bank statement came over. It showed they have a Tesla that's not showing up on their credit report. The Tesla's pushing my ratios over, and we got to figure out how to fix it.
Yeah,
And I'm figuring it out. Go ahead. Yeah.
Yeah, no, you're tackling it head on. I have
Right.
I have an expression that I live by, and it's swallow the frog, right? Which is like, a lot of times we'll wake up in the morning and there's something that we definitely need to tackle, and a lot of people like push it or they procrastinate. And it's like just swallow the frog and tackle it head on, right? And I love what you said, which was like, look, you got to give
Exactly.
them news. And for me, it's not just giving them news, but it's like, here's the issue, but here's the solution that we have to it so that we're not just coming with bad news, right? And we all know, funny enough, it's like sometimes it's not, if we've done a good job and
Exactly.
we've vetted the file up front ahead of time, that's typically not going to happen. But yes, every once in a while, like you said, oh, oops, they went and bought a new car, like you talked about, or hey, they transferred the money over where they shouldn't have, and now we have to source a new deposit somewhere else, right? It's like, hey, we know how to do this calmly and smoothly to keep the
Yeah.
process moving in the right direction so that it's, again, one less thing that they don't have to worry about, right?
Right. But it's just going to take an extra day or something. Right.
Right.
But it's being communicative, keeping them in contact with you, keeping them informed. It's such an important thing because to be uninformed is scary.
Right.
At least you're equipped with the knowledge and the information of like what exactly is happening. And then everybody can make their decisions on how they're going to feel about it based on the information at hand. It's the going MIA. That's really the problem. Yeah, for sure. So tell me the difference that you think is between like an everyday loan officer and a true mortgage advisor such as yourself, like, and what kind of information you think is so important in the beginning for our first time home buyers or for any buyer.
Right. Yeah, it's a great question. And honestly, I think a lot of it goes back to in that initial phone call, Zoom meeting, in-person meeting I have with someone, it's really educating them about what the market's doing right now. I'm sure you get this a lot.
Mm.
It's very much like, well, I heard that rates are terrible right now, or I heard the market's bad and it's going to crash. And it's like, well, no, here's some statistical facts that prove either yes or no to this, and just giving them the data to basically help support that, right? A lot of that has to do with, at least in our market out here in Santa Clarita, a lot of it is like we're starting to see more and more inventory hit the market, which is really great. So there's all these buyer opportunities for these clients that we have, right? And what's funny is, you think about realistically what's been going on in the market right now with rates going up because of the war talks and oil prices going up. And I just had this conversation with a client last week where they're like, we're thinking about kind of putting our search on pause a little bit. And I said, why? I go, 50% of the market just went away because of what you're about to do also. I go, you now have less competition, but here's the beauty, the inventory hasn't left either. So you have more options to choose from with less competition. And a lot of these people don't understand, right? That
Right.
like, look, you lock in a rate now. If rates get better over the next 2 to 3 years, we're going to refinance you, but you're never going to be able to go back and pay for your house cheaper than what you bought it for, kind of situation, especially here in our Southern California market.
Especially, yeah,
Right. And,
especially here, where like
and
even in down markets, there's, you're still appreciating 5 to 7% a year, even in a down market.
right. And then again, it goes back to, and I'm really big on like talking to clients, especially about the difference between what you qualify for versus feeling comfortable from an affordability standpoint, right?
Yeah.
And a lot of times they ask the wrong question. I'm sure you get that where it's like, hey, what do we qualify for? And I'm like, that's so the wrong question that you're asking. It's what do you feel comfortable for? You could take a client that has a salary of $240,000 a year, which is 20 grand a month. If they have no debt, they could qualify for a $9,000 a month mortgage, taxes, insurance. But who the heck wants to have that payment when they're
Right.
making 240 grand, right?
There's no way they're feeling comfortable unless there's supplemental income that we don't know about. And that's,
Exactly.
yeah, it's part of what I say to clients too, is this like, if you're salaried and you're earning, let's just say 10 grand a month, you're bringing home what, maybe seven, if you're lucky, maybe normally like 6,500 a month, if you're lucky. I can qualify you up to like five. There's
Right.
no world in which you bringing home 7,000 are you going to feel comfortable paying $5,000 on your mortgage plus taxes and insurance, but that doesn't matter. You're going to be mortgage poor, right? So that's what I'm going to be able to qualify you for because we go off gross. What do you feel comfortable spending? What does that number look like?
And that's where we come in, right? Like you talked about, what separates us from like an actual mortgage advisor is like you're literally walking through it. Even though legally we're not financial advisors, we sometimes step into that role and go, hey, what are we doing? And what does this look like from a month-to-month basis? And
Yeah.
can you actually afford this, right? And by the way, that's where I think the value comes in big time, is it's like that's where you're earning that trust. That client is less likely to shop you around because they know that you have their best interest.
Yeah.
And more importantly, you're building a good relationship with, if that was a referral from a realtor, you're building that good relationship with them. Because again, it goes back to they're feeling so comfortable about moving through with that process because you've done a good job of, instead of just saying, here's what the monthly payment is, here's your pre-approval letter, you qualify.
Right.
There's a much more in-depth conversation that goes into that, breaking down how they can afford it, how it's going to get even better over time, right? And fixating certain costs and things like that, right? So that's where that
Yeah,
separation truly happens.
for sure. For sure. I mean, I'll tell clients sometimes, like, so we can take you up to 50% in almost all cases. Yes. Do we want to keep it at 45 for like, for sure, DU approval, which is a desktop approval, we call it. But can I go to 50? Most of the times I'm getting an approval at 50, whether I have to like switch it to Freddie or keep it Fannie. We're going to get
Right.
an approval at 50. If you are salaried and there is no further supplemental income coming in for you, then we kind of want to keep it around 36 to 38. And that's going to be a more conservative number. And I'll take them to that. I won't even discuss the numbers to go up to 45 or 50. I'll be like, all right, guys, right now you're at 24. Because that's where most people feel comfortable, right?
Right.
That's where most people who are salaried and they make the same amount of money every 2 weeks and they have other expenses, as everyone does, like try owning a car in LA. So I'll say like, let's keep it around 36, 38. I explained to them what debt to income ratio is and how that works. And if they want to stay conservative, it's more on the 36 side. But again, most of the time they're chilling in that 28. But I'll tell them, I'm like, look, we can go, even conservatively, we can go to this number and you're going to hit that 36 or so. Not that you want to, but that's what that number looks like. So you have an understanding of what that is when you start shopping out there, you know?
Right.
Yeah.
Yeah, it's unrealistic to have a conversation with a client and go, oh, you need to, stop going to the grocery store and spending the normal amount of, dollars that you spend to just feed your family, right?
Yeah.
Or, oh, get rid of a car. It's like, no, like there's certain things that as, us societally, like we have to have. And it's understanding, like, look, if you want to afford the house, very much like you were talking about, you have to be realistic with what your budget is, right? Because we understand that there are things outside of just the house that you're going to continue to do. It doesn't mean that and there are times though, I'm sure you've done it, where you do have to have some harsh conversations with people and go, hey, you don't need a $1,200 a month car payment kind of situation. Maybe you get that
I
down
mean,
to a 600, right?
I
And
don't normally tell them that, but I will tell them, like, we are pushing mortgage poor here. So it doesn't, I can't figure out how you feel comfortable spending this. Like if I'm at 52 and they're like, I feel fine spending that a month. And I'm like, is there other monies that come in that I'm not seeing?
right,
Because I'm not including so many other debts that come into play for you, right? Like we don't include that in our ratios. We don't include insurance. We don't include car insurance. We don't include gas. We don't include any meals. We don't include any utilities. Nothing is included in this ratio. Cell phone bills, nothing. So imagine when you add all that, where my debt ratio is. So if I'm at 50, and you don't have other supplemental mattress money, so to speak, coming in, you're going to be mortgage poor. I don't see how you can feel comfortable with that. Maybe at that time, I'll say something like, if you really want to spend this, maybe you should consider taking like a lower car payment. People in LA really do drive crazy cars.
yeah. No,
I've seen cars that look like mortgage payments.
oh, it's crazy. Yeah.
Yeah.
But no, but back to that, what I was talking about, I was like, that was a real life example I had with a client where I said, look, like right now you have a $1,300 a month car payment. You can get something that's closer to six, right? And the reality is, increased his purchasing power by about another $100,000. And he was like, oh, I would totally do that. And so having that conversation to go, look, the money that you feel like is really great, and we all know, right? It's like you talk about a depreciating asset on a car that's nice and flashy and it's cool, but it's like for these people that want to be at a certain price point, okay, here's how we can attain doing that. We might have to cut in these types of areas purely from our qualification standpoint, right? And I think a lot of people are
100%.
more they're well, because that's the point. They don't even know. And it goes back to kind of what we talked about, which is where that's where we come in. It's not just saying, here's what you qualify for. And then they go, well, why don't I qualify for this? And then some people literally don't explain why. They just go, well, you don't make enough money. And it's like, well, did you think about talking about paying off this or trading in this car to get a different car here? Or, yeah, exactly. Structuring things differently at that point in time to make it make sense for them and make it work, right?
Exactly. As we were saying before, it's not like people ever learned how to do this. It's not like people taught us how to get a mortgage in school or anything. So it's starting from the beginning in this field of helping somebody really understand what it looks like to obtain a mortgage and what those numbers are. And, for anybody who's at their max with qualification, what is an important debt to have and what is not an important debt to have. Like you said, 1,300 car is less important when it comes to building equity in a home and owning a home.
Right.
If you're thinking about your financial future,
Right.
No.
Well, we all know it's a long-term game more than anything else, right? You got to get a lot of times it's talking to clients about getting skin in the game. You got to get in now. It doesn't mean that you're trying to qualify for the $1.3 million house that has a view and a pool and it's got the updated flooring and the 5 bedrooms. And it's like there's a point where you get to that point, but you got to start somewhere, right? We look at the traditional, you call it the American dream or how it's always been called the American dream, right? It's like you bought a starter home, you build equity there. When you upgraded in family or job, or come into some more money. There's going to be a very large transfer of wealth over the next 10 years, with a lot of inheritance, stuff like that. But these people are going to be able to then get to the point where they're ready to be able to take that next step up. And then funny enough, we have a lot of clients right now that are doing downsizing, right? They have that 3,200 square foot house and they're like, we don't need to have this, even though we have a really low payment on a house. We'd rather, live the rest of our days in a nice little 1,700 square foot single story house. And the utilities are way more manageable. The insurance is a lot cheaper, like all that stuff. And they like it and they can walk away with a nice little chunk of change from the sale of their other house and just feel really comfortable and ride off into the sunset,
Exactly. Well, thank you so much for being on. This was great. I love chatting about, the process of really getting somebody started and how we can comfortably guide people through the process as well. It's a huge part of it. I think it is what separates just a standard loan officer to a real mortgage advisor, of course.
Yeah. Yeah, it's very underrated. And again, it's like we can go online and Google a mortgage payment. Anyone can do that, but it's understanding, like you said, why, how's the process work? What does it take to actually qualify for that loan? That's where me and you come in and, really show them where our value is at that point in time.
100%. Exactly. And how valuable somebody who cares truly cares about their financial well-being, how the difference that makes, for sure.
Yep.
For sure. All right. Well, Kevin, thank you so much again for joining. I hope you all enjoyed it out there. Stay tuned for the next Mortgage on My Mind. I'll see you all soon.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.